Before the opening bell, U.S. indices closing mixed to finish the week on Friday. Shares in commercial and professional services, energy, and retailing sectors all closing on a negative note, while shares in automobiles and components, media, and food, beverage, and tobacco, they gained a bit of strength. On the economic docket, the trade deficit increasing to 46.3 in June from a revised $43.2 billion the previous month. In addition, non-farm payrolls increasing 157,000 in July, and the unemployment rate decreasing to 3.9% in July, meeting estimates, while market service PMI decreasing at a final read of 56 in July. Advancers ahead of decliners, 70% of SP 500 constituents trading higher on Friday. Now, after the markets closed, Berkshire Hathaway announcing a second quarter EPS of $7,301 versus $2,592 a year ago on operating income of $6.9 billion. In addition, net income surging to $7.3 billion from nearly $2.5 billion last year. Alphabet's Google is discussing with Tencent, Inspur Group, and other Chinese companies to offer its cloud services in China. This reported by Bloomberg citing sources. While keeping overseas, the Asian markets mixed today. The Nikkei down 0.08%, the Hang Seng up just about 0.5%. China CSI 300 down 1.27%, and South Korea's Kospi down 0.05%. European markets edging higher, and U.S. futures calling for a positive start. In terms of expectations today, Cardinal Health fourth quarter EPS seen at 93 cents on sales of approximately $34.4 billion. Sempra Energy second quarter EPS seen at $1.19, while Tyson Foods third quarter EPS seen at $1.42. Now, there's no major economic data due out today, while on the markets, the SP 500's where we begin, and that sees a bullish bias above 28.25, and that's in focus. Even though a continuation of the consolidation cannot be ruled out, the extent should be limited. Long positions above 28.25 are favored, with targets at 28.45 and 28.5375 in extension. The Nasdaq, meanwhile, sees the bias remain bullish, and the Dow Jones sees the bias remain bullish as well.